So if you've been paying attention, currently, Bitcoin is being heralded as the greatest investment of all time. But what makes a good investment? And more importantly, is Bitcoin safe for you to park your bankroll? If investing in Bitcoin has crossed your mind, or even if you've already picked up some Bitcoin but are unsure of the risk involved with buying into this new asset class, then this video is for you. Because today, I'm going to shed some light on the opportunities and threats that could come through your exposure to Bitcoin. You're going to get the most significant points so you'll be equipped to determine if your investment portfolio can benefit from holding Bitcoin. And if any benefit is found in this video for you, please consider liking the video and subscribing to the channel. Thank you in advance, and let's jump in. So when I first discovered Bitcoin, I was like most of the general public. I didn't understand Bitcoin, and so I questioned its potential. And over time, I've learned some important facts that have helped me evaluate Bitcoin from an unbiased position. And so today, I'm going to address some of the concerns that I have and some that have been shared with me so that you can be armed with the necessary information to make an educated decision on Bitcoin. But first, please keep in mind that I am not a financial advisor and this is not financial advice. Everything I'm going to share is for entertainment purposes only. Great. Now, I feel it's important to begin with clearing up one of the biggest misconceptions about Bitcoin that I hear all of the time, and I even believed myself for a very long time, and that is Bitcoin is not a currency, it is an asset. Now, this is a topic of confusion because Bitcoin is a cryptocurrency, right? When you hear the word cryptocurrency, it's natural for you to believe that Bitcoin is like the dollar bill you hold in your wallet. And although El Salvador has officially deemed Bitcoin as legal tender in their country, in most of the world, Bitcoin is an asset. Now, it's important to understand the difference because an asset is treated differently than a currency. And this is why my initial conclusion many years ago was that Bitcoin was a terrible investment, because when you trade an asset like Bitcoin or like your Apple stock, or even, sell your home, a tax event happens and a gain or loss would need to be recorded. I mean, could you imagine trying to buy a pack of gum and needing to calculate your tax impact? It would be insane. And so again, Bitcoin in its current state would not function well as a currency. And if it were only a currency, I would not consider Bitcoin a safe investment or an investment at all, really. But as an asset, you can compare its viability to other assets like your Google stock or precious metals like gold. Which leads me to another significant point. If Bitcoin is not a currency, what kind of asset is it? Well, according to the SEC chair, Gary Gensler, Bitcoin is considered a commodity. Now, commodities either have some form of usefulness or value. And the best commodity to compare Bitcoin to would be gold. Now, gold is globally recognized as a store of value, which basically means that the function of the asset is to hopefully retain value or purchasing power into the future. So just like if you own the Mona Lisa, the idea is that over time, the value will rise instead of decline. And that's why in the past, countries would back their currency with gold. It's valuable. Bitcoin is proving itself to be a store of value, and many believe that it is a better store of value than gold. Now, there are many reasons for this frame of thinking, but it really boils down to these three. Number one, Bitcoin is more scarce than gold. We don't really know how much gold is out there and will ever be out there, really. But with Bitcoin, we know that there is a maximum supply of 21 million. Number two, Bitcoin is more portable than gold. I can send coins to someone on the other side of the planet in seconds. But with gold, let's just say it's a little bit more complicated than that. Number three, Bitcoin's growth rate beats gold year over year. The price of gold in 2010 was around $1,750 per ounce. And today, the price of gold is around $1,750 per ounce. On the other hand, the price of Bitcoin in 2010 was a whopping 8 cents. And at the time of this video, Bitcoin has surpassed $60,000 per coin. So if you could go back in time, which one would you invest in? Which commodity did a better job of storing value in your opinion? The main takeaway here is that for an investment to be safe, it first needs to be established as an investment. And misunderstanding or misclassifying Bitcoin could cause you to immediately dismiss the investment altogether. I know it did for me. And once you understand why having a store of value is so important, especially in today's climate, it can help you understand the reason why Bitcoin is such a hot topic. You see, the global economy is hurting. And there are a bunch of factors at play, but the main one is too much money in circulation causing higher than usual inflation. Here in America, most of us know that our currency is inflationary, meaning every day our buying power gets less and less. And so in the past, you could put your money in a savings account, and with the interest earned, it could offset inflation, causing you to break even in a sense. However, those days are gone. And now with excessive money printing, the value of your dollar is just shrinking and shrinking. I mean, you see it everywhere. I remember when I first began driving, gas was around 95 cents a gallon. And now here in California, it's right under $5 a gallon. So your purchases are costing more. But the concerning news is that more money printing is inevitable. And when you couple that with advancements in robotics and artificial intelligence, you get this realization that things will continue to cost more, but the availability of good jobs will go down. So a hedge against the current and coming conditions are definitely needed. And historically, that hedge has been gold. But as we have just discussed, Bitcoin is growing at a rapid rate and gold is not really moving. So in terms of storing value only, Bitcoin may be a safer hedge and investment over gold. But let's look at some other forces that could threaten Bitcoin, because one statement I hear pretty often is that the government may come in and shut down Bitcoin and holders will lose all of their money. And I think that's a fair concern. I mean, especially when you hear, news stories like China banning Bitcoin. Now, let me just say this. The reality is China, they're in the business of banning important technology. They've banned, technology like Google and YouTube and many others. And them banning Bitcoin is not a true indicator of how the world will treat this technology. But there are also many signs that point to Bitcoin being around for the long term. Most importantly, as I mentioned earlier, the SEC views Bitcoin as a commodity, meaning that the coin is not under their jurisdiction for regulation. So the SEC is not coming after Bitcoin. And Jerome Powell, the head of the Federal Reserve, the people who print our money, came out recently and confirmed that the US has no plans to ban Bitcoin. So, there you have it in black and white. Our government is not trying to cancel Bitcoin. But for me, the Coinbase IPO, the numerous reputable institutions that are heavily invested in Bitcoin, and even the Bitcoin ETF communicates that from a regulatory standpoint, Bitcoin is safe from getting shut down. Now, another concern that challenges Bitcoin as a safe investment is the volatility of the asset. Sure, it's all fun and FOMO when Bitcoin holders talk about their massive gains, but what about the massive swings in price? Since its inception, Bitcoin has seen unprecedented growth, and that growth has been known to be followed by deep corrective periods that can only be described as gut-wrenching to watch. For example, at the beginning of 2017, Bitcoin was around $1,000 a coin. And by the end of 2017, it hit around $20,000 a coin. So holders enjoyed a juicy 20x in 1 year, which is crazy in other markets. But by the end of 2018, it trickled down to a sad $3,000 a coin. Now, critics of Bitcoin point to this volatile action of the coin as to why it is not dependable and not safe. And I understand where they're coming from. However, the reason for the volatility is due to the size of the market. To put this in perspective for you, at the time of this video, Bitcoin is a $1 trillion asset in a $2 trillion market. By contrast, the US stock market is a $48 trillion market and gold is an $11 trillion asset. So if an institution moves, $100 million worth of gold, the price would not really be that impacted. But $100 million moved out of Bitcoin could cause a little bit of a panic and make other investors believe that the market is imploding. And I know $100 million sounds like a boatload of money, and it is, trust me. But financial institutions move billions of dollars on a daily basis. And so as more adoption happens and the market value of Bitcoin rises, large money movements will have less of an impact on price. But I do want to make the point that although in 2018, Bitcoin went from $20,000 to $3,000 a coin, the people who were holding at the beginning of 2017 still enjoyed a nice 3x on their money. Pretty good. So from a volatility standpoint, is Bitcoin a safe investment? Maybe. I mean, if you're prone to buying at peak prices and selling at cycle bottoms, then Bitcoin may not be for you. And truly, investments in general may not be for you either. But if you pay attention to the historical movements of Bitcoin, you'll see that volatility is generally short-lived, and over time, Bitcoin has continually moved on an upward trend. Now, the last concern on Bitcoin not being a safe investment is, in my opinion, the most significant. And that is because it holds the biggest threat to all investors. I mean, regardless if you're new to Bitcoin or have been around since the beginning. And that is the decentralized nature of Bitcoin. Now, decentralization basically refers to the point that the network is not controlled by one governing body, which most of us are really used to. The network is community driven. Decisions, development, and even record keeping is approached in a decentralized manner. And I want to unpack this because although there are perceived downsides, there are also clear upsides to decentralization. For example, since there is not one governing body making decisions for everyone, the greater community doesn't fall victim to potential selfish decisions by a few. Like, for example, if the executives at Wells Fargo decide to charge more for a checking account because they all deserve bigger bonuses, in a community setting, that would not fly. Another upside is the 100% transparency of the network. Because Bitcoin is built on blockchain technology, we have complete access to view every transaction that happens throughout the network. So there's zero possibility of manipulation of records. And we're able to use this information as investors to make the best decisions. I mean, imagine in the traditional market being able to see every buy and sell a hedge fund makes on a daily basis. It would greatly impact where you would place your money. No other investment on the planet offers this. So there are some definite advantages to decentralization, but the biggest threat and the one fact that could make Bitcoin an unsafe investment for you is your personal fiduciary responsibility. And this basically means that you are your own bank, and that comes with rewards, but it also comes with a huge responsibility of protecting your own funds. And so with your traditional financial institution, you pay them in a few ways to provide a level of assurance on your funds. So if someone steals your identity and accesses your checking account, in most cases, the bank will cover the loss. Or if you forget your ATM PIN number, the bank can identify you and provide you with a new PIN number. Now, when you are your own bank and your account gets hacked, you're responsible. When you are your own bank and you forget or lose your credentials, you're responsible. Now, there are ways you can protect your Bitcoin. And if you haven't seen it, I did a video on my top security steps you can take to protect your crypto. So I want to encourage you to check it out. But the point being, with a few easy precautions, you can rest easy. But with that said, the fact still remains that there will be some investors who will suffer loss because of their own negligence. And that could cause those individuals to consider Bitcoin to be unsafe. But since there are security measures you can take to mitigate risk, my sentiment is that from a decentralized standpoint, Bitcoin can still be considered a safe investment. So when you consider the entire scope of Bitcoin, its transparency, it being a great hedge against inflation, its decentralized structure, and being free of government shutdown, it would seem that to me, Bitcoin's a safe investment. Well, let me say, as safe as an investment can be. All investments carry a level of risk. Keep that in mind. But with that said, what is unfolding with Bitcoin and potentially the greater crypto market is truly unique, and participation may be a once in a lifetime opportunity. So you'll have to decide if the investment is right for you. But hopefully, you're now better prepared to make a choice. But what are your thoughts? Do you believe Bitcoin's a safe investment, or do you think it's a waste of time? Please let me know in the comments. Also, if you have any questions or you need me to expand on any of the points I shared, please let me know in the comments. You never know who it may help. And lastly, I want to thank you for your time. Your time is valuable to me, so I do hope you found value in this video. And until next time.